Good Tuesday night. It is, wow, the 1st of November, 2022. This is Cowboy Metals Live. We're broadcast from the great state of Texas, and we take no BS. We're starting either, oops, I got some feedback as I'm watching the stream. All right, we're starting either early or late, depending on how you look at it. Normally I start these at 5:30 p.m. Central Time. I was traveling. Asked Danny to set this at 6:30, but I got home a little bit early, so what the heck, let's just do it now. We are in. Poll question is up. How much does energy prices affect the prices of gold and silver? A lot, not much, or no effect. Vote in the poll, everybody. Thank you, Peter Froheim, for showing up early and riding shotgun, being our moderator. We appreciate that. Thank you, Ridge Runner and Frank Harris, for being here, and everybody else that's in. I think we got, Vatana Ranch is here. We got 11 people. I did put notices out on YouTube and Twitter, so hopefully people see that and come join us. This one's going to be titled The War on Big Oil and How It Will Launch Precious Metals. I think we've got a big boom coming up in precious metals because of what's going on. Now, I'm going to play you a video from Mr. President Biden, and I'm going to preface this by saying I rarely, if ever, play videos from any political person because people will label your channel as being red or blue or green or brown or whatever it is. For the record, I don't give a crap who's in the presidency. I'm just looking at the information. This is just for research purposes. I don't give a crap about Biden or Trump or any of that stuff. I'm an independent. I'm a libertarian. I think both parties are screwed up. Let's just equal opportunity there. That being said, this is nothing specifically against Biden. He just happens to be the guy at this point in time in America's life who has decided that they want to tax the hell out of everything. Well, this happens to all nation states when they get older. It's not necessarily his administration. I think anybody would have done it, in my personal opinion, because they have to, because the Titanic's going down and they need the money. So they're going to roll out the taxes. So again, nothing to do with Biden, even though he's going to be on the screen. Don't yell at me for being a Trump supporter. Didn't vote for Trump. Okay. I'm a libertarian, voted for third party for the last 3 presidential elections. I don't care if it's red or blue. And the fact that I even have to say that is horrible, but people are going to come in and blame me because we're going to put Biden on the screen. And what are you going to do? It just happens. That's the internet. All right. Without further ado, without gilding the lily, as I said in the movie, do y'all know which movie that quote is from? It's from a gentleman who played Geoffrey Chaucer in an old medieval-based movie. It was actually a lot of fun. It came out a few years ago. Without further ado, without gilding the lily, if you guys, tell you what, ooh, maybe I'll do this. Maybe I'll send an ounce worth of silver from Kinesis to anybody who can tell me what movie is that from during the broadcast, not after. If you can, and you have a Kinesis account, I'll send you some silver. By the way, our preferred provider is Kinesis. Why don't we do a shout out to Kinesis? I've decided to have them on the program quite a bit because I like what they do. And I do have an account. I'm not going to log into my account here today, but I do fully recommend, if you guys are interested in storing your gold and silver, and you want to be able to use a debit card and also send it to other people and have that flexibility with your gold while also having it in an audited, safe, state-of-the-art facility, Kinesis may be your choice. And I certainly use it. And next time I'll talk about Kinesis, I'll show you one of the transactions I made. I think you guys will get a kick out of it. All right, now on to the story for today. How is big oil going to affect precious metals? Well, I'm going to tell you. And we're going to start right now with this speech that President Biden gave. I don't know the exact day, but it was recently because the article came out in Zero Hedge yesterday, so it can't be that old. But basically, Biden and his administration are blaming big oil for war profiteering and they're urging a congressional windfall tax. Now, I'm not here to defend oil or the energy companies. Certainly, there's a lot to complain about there. I'm more looking at it from the perspective of, one, how does this affect prices of everything, including precious metals? But two, if they do a windfall tax, they ain't stopping at energy. They may have to go after other sectors. So if you're an investor and you're invested in, say, real estate, and they do a windfall tax, and you get caught up in that, it's not going to help you as an investor. So it's good to know what the government is doing, how it's going to affect your investments, gold and silver. But if they're going to do windfall tax, it's going to affect everything. They're not going to stop at just energy. They're going to go over it. All right. Now let's get into what he says. And I'm just going to let it play. And then afterwards, I'm going to state the facts that every time that countries do this, it backfires in their face. And I'm going to explain how. But let's just listen to what he says here. And it's all this moral thing. It's not about the law. It's about the morality of you're making too much money. And again, I'm not here to defend big oil and chastise the administration or the president. I'm here to point out that if they're going to do this to oil and they find another area which is making a lot of money, they're going to go after that one, and it could affect your investments. And not only that, if they go attack big oil and start, taking these big taxes, it's going to raise energy prices, and energy is an input to just about everything in our economy, and it's going to raise the prices for everything. Anyway, I don't want to give away I'm burying the lead here. Let's go ahead and watch the video, and then I'll make my comments after.
World, not just here, but around the world. And because of the action we've taken since then, gas prices have actually come down going into the Strategic Petroleum Reserve here at home in America. They're down more than $1.20 since their peak this summer, and they've been falling for the best part of the last 3 weeks. In June, the average price, not the most common price, but the average price nationwide was over $5 a gallon. Today, the average price for a gallon of gas is $3.76. That's adding up to real savings for American families, the difference between those prices. And this difference makes a difference. In a difficult time, Americans across the country have stepped up to do the right thing. But not everyone stepped up. The oil industry has not met its commitment to invest in America and support the American people. One by one, major oil companies have reported record profits, not just a fair return for hard work. Every company is entitled to that, a fair return for the work they do or innovation they generate. I mean profits so high it's hard to believe. Now, the second quarter, the profits were really high, but the third quarter, last week, Shell announced that it made $9.5 billion in profits for the third quarter. $9.5 billion. That's almost twice as much as it made in the third quarter of last year. I think that's something. You think that's incredible? I thought, that's as good as high as it's going to get. Then along came Exxon. Exxon's profits for the third quarter were $18.7 billion. One quarter, $18.7 billion. Nearly triple what Exxon made last year. And the most in its 152-year history. It's never made that much profit. In the last 6 months, 6 of the largest oil companies have made more than $100 billion. $100 billion. And we had a little discussion about this, the three of us and others. $100 billion in profits in less than 200 days. That's not bad. And here's why this matters. I think it's outrageous what the size of the profit. Here's why it matters. These companies were making average profits they've been making by refining oil over the last 20 years, instead of the outrageous profits they're making today. And if they passed the rest on to the consumers, the price of gas would come down around an additional 50 cents. If they're investing their profits at historic rates in their U.S. operations, then America would be producing more oil today, and prices would be down even further. But rather than increasing their investments in America or giving American consumers a break, their excess profits are going back to their shareholders, and they're buying back their stocks, so the executive pays are going to skyrocket. Give me a break. Enough is enough. Look, I'm a capitalist. You've heard me say this before. I have no problem with corporations turning a fair profit or getting a return on their investment in innovation. But this is remotely what's happening. Oil companies, record profits today are not because they're doing something new or innovative. Their profits are a windfall of war. The windfall from the brutal conflict that's ravaging Ukraine and hurting tens of millions of people around the globe.
Okay, I'd love to listen to this whole thing, but on a live stream, it's a little bit long, so I'm going to come off the share and just have a couple of comments real quick. So I'm actually going to defend the president here a little bit in that I get his point about the money goes back to shareholders, they buy back shares, it enriches the people at the top, because that's the complaint a lot of us have had about the stock market in general for the last 10 to 13 years. The Federal Reserve was printing all this money and easy money, quantitative easing. A lot of that money went to corporations in the form of debt, and they used that debt to buy back shares, and it boosted their share price. The reason it boosts their share price is when you buy them back and it creates less shares, but there's the same amount relatively of demand in the marketplace, it raises share price. It puts a floor under the share price. But they took on debt to do it, and now we see all the zombie companies and all that I've talked about on this channel with that. So I do think that he is addressing an issue there, that the share buybacks is an issue. However, doing a windfall tax on companies because of easy money by the central bank and then turning around trying to tax that through companies is a slippery slope, because one, you're not going one for one to all the companies that essentially took that money. And two, you have to go back to the central bank in the first place. If it's a little bit disingenuous for any politician, any politician or anybody to say, yeah, it's okay that we produce all this money and save the economy, but then the after effects of that some of these areas make a lot of money because we printed all the money and it generates profits for them, that all of a sudden we turn around and do a windfall tax. I think that's maybe a tad disingenuous, but the bigger issue is not that. I'm not arguing the politics of it. The bigger issue is, if they do a windfall tax on oil, what are they going to do it on next? So what he did was he turned around and said, the three of us were talking beforehand. He's talking to two other essential statists, or politicians, if you will. I don't mean statists in a bad term. I just mean they're politicians. He's talking to two other politicians about, hey, we all agreed on this. This is bad. Well, is that how you set policy? Is you go to two people in your administration, whoever they are, and you have this groupthink session. You say, well, we're going to make this big policy of now taxing oil. Because what that's going to do, and what I'm about to show you, is raise the prices of everything. Now, it is going to be good for precious metals investors eventually, because those costs are going to be transmitted through the supply chain. I'm going to prove that with some articles I have. But it's going to hurt everybody else. When you raise the cost of oil, it raises the cost of everything in which oil is an energy input, which is just about everything in society. And so if you're going to tax them, I don't know that that's the way to do it. And you'll also have to look at yourself and turn in the mirror a minute and say, all the administrations leading up to Biden, and even Biden has said he doesn't want the central bank to tighten. We've seen that a lot. You've seen the UN say, we don't want all these central banks to tighten. Okay, so a lot of the politicians and these supranational agencies are speaking out against the banks because they're realizing the banks are not helping them. And this is the whole thing. The banks were there when you needed it to save your economy, quote unquote, save the economy. I say kick the can down the road. And the politicians were okay, but they're not okay now that when these companies are making all this money from what the central banks wrought. Well, if you didn't have the quantitative easing policy that you had, they probably wouldn't be in this situation in the first place. And it's one status policy following another, and it's just a cluster. But that's the politics. Let's put the politics of it aside, and let's look at what's going to happen when they do that. And we're going to take a look at what's already going on with the supply chain. Let me get my meeting controls out of the way. We'll get to gold and silver in a minute. I'm actually going to put this article at the end. Let's talk about energy prices on the overall metal supply chain. And we're talking about iron, tin, every metal, not just precious metals here. And this is an article by S&P and Global Intelligence. And they're talking about energy prices and what's going on. And the title of the article is, high energy prices turn metal supply chain into global inflation engine. Now, this is written back in March. Okay, so this is way before what the president's talking about now with the war, because back in March, all the inputs into the metals in terms of energy had already taken effect before, all the stuff went on with Russia. In other words, I think a lot of this problem predates the whole Russian issue. And I know everybody wants to blame Russia for this, that, and the other. And yes, that has disturbed the global supply chain a lot, and the sanctions that America put on did too. But it was coming about before then. And I like to point this out anytime any politician, whether it be the president or anybody else from any party, I don't care which one, red, blue, green, I don't care. If you come out and say, well, inflation's an issue since the Russia war, but inflation was going bonkers 6 months before then, obviously you don't blame it just on the war. But it says here, all of the metals are getting expensive. If you look at what's happened to natural gas prices, they shoot up as a component of this. Hard coking coal prices, crude oil prices. This is just what's going on geopolitically. Now, if they put a windfall tax on it and it hits the oil company's bottom line and they got to charge higher prices, guess what? These charts continue to march up. And that's an input into everything else. And here's a nice little chart talking about share of energy in iron ore mining costs. Look at the share of energy. It's this orange right here. Energy is a huge input to iron ore because you got diesel, you've got gasoline, you've got natural gas and coal and all those things that go into grid power. A lot of remote miners, by the way, use diesel. So here's a little quote here. Iron ore miner Fortescue Metals Group is operating an environment of industry-wide cost inflation due to strong demand for labor and skilled resources, as well as exposure to external factors, including the escalating cost of diesel. So diesel is huge. And if you look down here, energy accounts for 19 to 20% of copper mining costs, according to Commodity Insights data. And the industry will be spared some of the effects of rising energy prices, and hydropower is a significant energy source. When's that going to happen? Is that going to affect energy prices across the world? No, because not everybody has hydro. Hydro is not the answer for grid power. And so share of energy, copper mine costs, you can see it down here. They've got it down to where 15 to 20% of the entire metals industry costs is affected by energy. So if you raise the cost of oil or natural gas, which has been raised because of geopolitical conflict, or you demonize uranium and coal and you don't want it anymore, and so what energy we're left with costs more, guess what? It goes into the mining industry because they need it to pull it out of the ground. What does that mean? It means all of the inputs into our economy just went up. And let's look at an IEA. This is it was it International Energy Administration. Okay, so this is not a blog or an analyst. This is a government agency basically writing on this. Prices of key minerals and metals for the clean energy transition have spiked in recent months. And this is sort of the beauty of all these goofy programs. You want clean energy and you're demonizing oil, natural gas, uranium, and coal. But guess what? To get the minerals you need for the clean energy economy, you need uranium, you need nuclear, you need oil. So that what they're trying to do is transition into new energy without having built the infrastructure and demonizing the old industry. And that just raises the cost of transition to the new one. So they're shooting themselves in the foot. And that's what this whole article is about. It's the fact that every time energy costs rise, it gets further and further from a clean energy economy. And the beauty of the thing is, to get to clean energy, you need dirty energy. You can't get to clean energy just wishing it. You need the quote unquote dirty energy. And we can argue how dirty it is. But that's what this is talking about. And it's talking about the energy transition of metals. Look how much lithium has gone up. Cobalt, nickel, aluminum, copper. Price increases from January 21 to March 2022. That's 14 months. Look at the freaking cost of lithium. If energy is 15% of mining, energy is in here in terms of rising costs. It's not the only thing, but what he's saying in this article is it's a big part of it. Average price pack of a lithium ion battery, it's gone up. Look at that spike. Okay, technology cost trends for solar PV module, it's gone up. A lot of this has to do with energy. For batteries have gone up. For wind turbines have gone up. And yes, Russia's in here, but I would like to point out inflation in energy was happening way before Russia ever invaded Ukraine. I've stated that on the program multiple times. I've looked at the inflation charts. I've looked at energy prices dating back before Russia even thought about invading Ukraine. You can't blame it all on that. I know politicians want to blame current events on everything, but in reality, the policies they have, the various world governments, to transition to clean energy depend upon dirty energy, quote unquote dirty energy, if we're using those terms. And the more that they make it difficult to get those energies out of the ground, the harder it's going to be to get to clean energy in the first place. And I don't understand why these guys don't understand the effect of their policies. I get where you want to go. Okay, but the roadmap to get where you want to go is broken. It doesn't work. And if the government's going to windfall tax an industry for being profitable, what's the incentive for anybody to have industry in the United States? They're going to go where they don't have the windfall taxes somewhere else, and you're going to lose what fragile little amount of actual manufacturing we have left here in the States, which isn't a whole hell of a lot. Taking a break before I get to the metals piece, I did promise you I'll talk about how it's going to launch precious metals. I will get there, I promise. But I wanted to talk about the effect of war is having on the government's own desires for clean energy, and what is going to have the effects on all of the economy. And if you start passing more taxes, you're going to push industry out of the US and make us even more dependent on energy from other places. And so doing it the way you're doing it is not smart. Not saying that the goal is not good or bad. I'm not making that judgment. But the policies you're passing are going to bite you in your own face. It's like my mother used to say, cut off the nose to spite your face. You don't like the way you look, so you cut off your nose and make it worse. That reaction doesn't help anything. And oh my goodness, did I hear that phrase a lot growing up. Apparently I did a lot of stupid things as a kid. Here's a good article from GoldHub talking about rising energy prices push AISC to a record high in Q2 2022. What is AISC? Well, those of you who are familiar with mining and have followed my mining articles over the last 12 years and followed the channel know that AISC is all-in sustaining cost. Now, AISC is this sort of amorphous term that the mining industry came to tell us how much it costs to get metal out of the ground. So if you're looking at AISC for gold and it's $1,500 for your project, but gold price is $1,200, you're negative $300, you're not going to mine that thing. Now gold is actually up much higher than that. So if it's $1,500 to get out of the ground and say gold is 1,700, 1,800, you're still going to make money. So the AISC is a closely watched metric to see whether a mine's going to be profitable. And it also is a way for investors to compare one mine to another. If one mine can get out of the ground cheaper, they're probably going to have more profit at the same gold price than the other mine, assuming, you know, all that information is legit and accurate and it all works out like the plan. You know, not all plans go according to plan. Mining plans don't, but in general, AISC is a good idea to figure out how much it costs to get the metal out of the ground, whether it be gold or silver. Well, here's an article in September of this year, timely, by Adam Webb, as a director of mine supply for Metals Focus. So obviously we've heard the name Metals Focus before. This is a reputable organization. They do all the research for Silver Institute on silver, by the way. So they're considered one of the leading firms on providing that data. So the reputable source. And just watch what's happened to AISC of gold. It's gone at about $1,000 a couple of years ago to now we're 1,300. So it's rising. What's causing it to rise? Basically energy. Let's listen to what he says. In Q2 of 2022, costs in the gold mining industry continued rising. The average all-in sustaining cost, AISC, reached a new record high of $12.89 an ounce, up 3% quarter on quarter and 18% year on year. The average industry AISC has now sequentially increased almost every quarter since Q2 of 2020, hence his chart, rising by 33% over the period. This ongoing rising cost has been driven by inflation of input costs for miners, combined with high gold price incentivizing higher low-grade production. So I will agree that more production comes online for lower grade projects as the price rises, but also the all-in sustaining cost is also going up because the inputs are going up, and he is pulling out energy here. So input costs, including labor, fuel, electricity, and consumables, have been rising largely as a result of COVID-19 and related supply chain. However, the most significant driver of cost inflation was energy prices as a result of Russia's invasion of Ukraine. Now, he's blaming this on Ukraine. You know from my channel that inflation and energy was rising way before Russia ever touched Ukraine, way before the issues with Nord Stream, which is on my channel. I documented commodity price inflation for over a year now, including energy, way before. So every time somebody blames this on Russia, I think it's lazy journalism, and I combat that with actual facts. You go back and watch my videos. I had all the data dating about a year ago saying we are going to have price inflation across everything because energy prices are going up, and I talked about it. Just want to point that out. This pushed oil and gas prices considerably higher, with direct implications on diesel and electricity costs for miners. Remember, 15 to 20% of mining costs comes from energy, and remote miners, which he'll talk about in this article, get most of it from diesel, which comes from oil, and it's going to go way up. And so if you are looking at miners in your portfolio as a point of investment advice, look at who runs more diesel and who runs less. If energy prices are going up, the cost of mining even on grid power is going to go up, but oil may go up more. So that's something you want to look at if you're investing in the mining space. The average gold prices remain almost flat. So we're not getting higher gold prices, but the costs are going up, meaning profits going down for the miners in the industry, which at some point it's going to affect the gold miners. AISC margins are lower. So even though we have a higher gold price, the margins, the difference between the AISC, their cost, and what they make on an ounce of gold are shrinking. Why? Even though gold is going up, energy and input prices are going up faster, and that is compressing margins in the mining space, not only for gold and silver, but everywhere. And that's why your prices are going to increase. Okay, you get how this works? And so when the president comes back and blasts big oil and sets his sights on oil, and they're going to put a windfall tax on it, what's it going to do? It's going to raise input prices for the entire economy. What's it going to do for precious metals? Well, the AISC has to go up. And for these miners to mine it, they have to make profit. So what is going to happen to the price? It's going to go up. And this is a dynamic that plays out, especially more in oil than it does in silver. It affects silver. Gold. It affects gold more than silver, because the price of gold and the 40 or 50 years of data that I looked at never falls below the cost to mine it. It's the cost to mine gold plus the amount of investment going into passive ETFs like GLD as an investor demand. You add those two together, AISC and investor demand, and there you get a nice chart of where gold is going. And there's an article I wrote about 2 years ago talking about this. So the gold price will never go below what it costs to mine it, because the big boys will just shut it down. They'll turn it off and you won't have the gold. Okay. And they won't mine the gold until the price goes up. So that means it's going to push gold price up. And if energy just continues to get more and more expensive, and that affects the mining industry, gold and silver go up. The only question I have is, will the price of gold and silver go up more than inflation of other goods and services? A lot of that depends on the derivative traders. If the derivative traders on COMEX get word of this dynamic and understand that all prices in the economy are going up, including gold and silver, because of taxes on oil, the Russia-Ukraine war, other issues with input costs in the economy, they're going to say, okay, we expect gold price to go up, and it will affect the gold price. Over history, that's always been the case. And I think as a consequence, silver will follow along. So I think what's happening in the industry right now with harder to get fuel supplies, geopolitical concerns, but the inflation that had already hit way before Russia and Ukraine got started, and these new taxes the administration wants to put on oil because it's bad that they're making profit and they're making this moral judgment. Whether you agree with it or not, the point is it's going to raise prices for everything, including gold and silver. So gold and silver is going to go up. And this is something that Steve at SR Rocco covers all the time. He's probably covered energy input costs to the gold and silver market better than anyone else. You can read him at his website, SR Rocco Report. I forget the address. You can read him at Seeking Alpha. Just look him up. Steve St. Angelo has probably done a better job of covering this than any. So go look at his charts. But definitely we expect gold and silver price to rise because the war on oil is coming. Why is the war on oil coming? Remember my research about 80-year and 250-year cycles. As nation states age and economies age, after 3 80-year periods, 3 conjunctive cycles, you get that period in a country's history. And this is dating back to the ancient Assyrians, almost 3,000 years. So John Glib did this research. When you get to that 250-year mark, you start having tremendous fiscal issues and taxes go up. So if you're living in the States or you're a U.S. citizen living anywhere else and you fall under those rules, having to file income tax in the States, and I'm not a tax attorney, I'm just telling you my thoughts. So this is not financial advice, but it seems clear to me that taxes are going up, inflation's going up, and the amount of money you have to buy goods and services and have a life here in America is going to get a lot worse before it gets better. That's what all my research tells me. Gold and silver price will spike, but if you stay here in the United States, a lot of that's going to be absorbed by the cost of you having to buy stuff, pay rent, pay a house, have a car, work clothes, whatever it is. And so this is something you may want to think about in your portfolio. Do you dump more money in gold and silver and try to offset the oncoming inflation and oncoming taxes and oncoming increases in energy input prices into everything? It depends. How much gold, silver can you buy versus the rest of your budget? Because if oil is going to spike everything, how much gold, silver do you have to offset that? Okay. So it's good. Gold, silver is going up, but everything else will go up as well because of this. And that's the impact of what's going on. So I think we're going to have higher inflation. I do think it's be good for gold and silver investors. The flip side of that is look at your budget and figure out how those rising energy prices are going to affect your budget. It's not just going to be gasoline that you put in your car. It's going to be everything that runs off of diesel or gas or kerosene. Think about when you get in a plane, it all runs off kerosene. That's all part of oil production. There's distillates that affect a bunch of industries. The rubber industry, a bunch of side industries will be affected. And so that's something maybe to pay attention to as we look at what the administration is doing. Now, again, I'm not blaming the administration. This isn't anti-Biden. I'm a libertarian. It's because after 250 years, every civilization does this. I don't care if Biden's president or Papa Smurf. It doesn't matter. They were going to do the same damn thing because they have to, because they need the money, because they're bankrupt and they're trying to save the system. And the people in the system are going to try to save the system. The question for you is, do you stay in that system? And if you do, what is your hedge? Is it gold and silver? Is it something else? Do you get outside the system and go somewhere else? Though I'm not your financial advisor. You have to make those decisions for yourself. I'm just a research guy, but it's pretty damn clear what's happening. And it's pretty clear that gold and silver are going to go up, but you're also going to have to offset all your other price increases. And so that's something that you guys definitely want to consider. We're going to wrap up the poll. 84 votes. Woohoo! Good job, guys. 73% of you, I think, correctly stated energy prices will affect gold and silver. 21% not much, 6% no effect. Thank you for voting in the poll. Thank you for Dumb Money Media for doing the contribution to the program. Remember, super chats are open. Dumb Money Media is doing a new vid for Silverfest. We're totally excited about that. It's coming November 12th. I'm going to be in it. Arcadia Economics Silver Fest can be so much fun. Oh man, he's done a lot of editing, but this video will be great. He does meme videos that promote all of our conferences. Love to have him at the conferences and on the channel. Thank you so much, Dumb Money Media. Don't see a lot of questions in here for you guys. Thanks for being patient as we put this at a different time we normally do due to travel, but we'll be back to our normal schedule for the next few weeks because I'm not going anywhere and I'll be in the great state of Texas for the next few weeks. So that will be good. Thank you for Yara for stopping by the program from Arcadia Economics. She is always welcome on the program. And actually, I spoke to her and Chris right before we did the broadcast. So good speaking to them, good friends. Stay tuned to Arcadia Economics channel for more announcements on Silverfest and all the great guests. Stay tuned here because we've got more. Don't leave after this video. We got a lot of stuff for you. A lot of good content you guys may not have seen. Click on it on click on the video list and look at all our great videos. As a reminder, the preferred provider for this program is Kinesis Money. And next time we talk about Kinesis Money, I'm going to show you how I transferred money to my employee using Kinesis and paid her in silver and how she's so excited. And then we're going to show you how to use the debit card once I get one, because US, I believe, are now approved for those debit cards. So we'll get one as soon as we can get them out. And I'm a big proponent of Kinesis Money. So if you're interested, maybe go take a look at them. That has been it for this one, the war on big oil and how it will launch precious metals. It will launch precious metals. Energy input costs are going to increase the cost of mining anything. The question is, how much of your daily and monthly budget can you offset with the fact that gold and silver is going up? Will it rise faster than the rest of inflation? I think it probably will, but there's no guarantee, at least in the short term. And so that's something maybe that you guys want to pay attention to and figure out for your portfolio. I'm done. I'm going to go have some wings and a beer after my travel. Appreciate everybody for joining the program. This has been Rob 𝙂𝙊𝙇 with Tuesday's edition, November 1st, 2022 edition of Cowboy Metals Live, where we broadcast from the great state of Texas. And because we are honest and sincere, we take no bullshit and we tell you the truth about what's going on. Thanks for everybody for joining the program. Until next time, Rob 𝙂𝙊𝙇. We'll see you.